Bom, bom. You. Live. I didn't get the email yet. I am live. Okay, there we go. Hit that thumbs up button. Whoop, whoop. We're going to go live chat. And I've got to get rid of these. Brittany bitch. I love that. Makes me smile when I see it. Okay, let's just make sure I've got everything in order. Morning, Joe. Morning, Mike. Morning, Chris. I've got a bunch of photos that I don't think I'm going to include in the newsletter. Plus year gain. Okay. And yes, I did buy SQQQ. I bought once it had confirmation at about 1450, I think. 1454, 1451, somewhere in that neighborhood. So, and we'll look at Apple downgrade, SOFI downgrade, AXP upgraded, Boyle making moves. Morning, Mark. DKNG, Crowd, Snow, Pan W. What else do I have that's in a pullback? AMD. XOM is on the climb. I mean, that 102, you're at 104. Nice 2% move. CVX and Exxon. Yesterday's okay. I think it was yesterday's newsletter. Let me just make sure. We're going to go over yesterday's newsletter because it was a masterful. Where's the shipping stuff? There it is, Maersk. Yeah, it's in yesterday's. Let's look at Mara. Because I'm still holding Mara at 26, 28, somewhere in that neighborhood. It's at 23. Let's run it. I mean, you're still in at that $9. Mara. Let's see. Let's look at GBTC. Because I think this is still in that run, yeah. Still above that 50-day. It's using that 50-day. BITO. Let's see BITO. I need to get into this one. Got you in at 2046. Let's see. let's say, let's go to, I want to go to GBTC here. Because Grayscale's in the news about talking. I guess the news isn't there. Let's go to FinViz and let's look up GBTC. Oh. What am I? Oh, it's not there. They're not in there. Let's look up Grayscale and JP Morgan. Dude, there should be news on this. Yeah. Let's see, Bloomberg.com. It should be wide open. Yeah. Oh, they're going to charge me. No, I don't want to get charged for this. Let's find something that Yahoo Finance will have it. I don't want to trust something out of Malaysia. We'll look at finance. Okay. We'll put that in there. Because it leads to our douche of the day, which is Jamie Dimon. Good morning, John. Douche of the day. We'll get that out of there. And we'll put that in there. Okay. I like that one. God, look at that. 330%. 5 year, 680%. But, I mean, here's the thing. 2021, you were higher. You know, 2000, both times in 2021, you were higher during both scale-ups. ETHE. I mean, this is, you know, what's it going to do? There we go. Let's look at GBTC, and then let's look at the peers. Why does everyone get stiff for BTC-based equities? So, Christian, the reason I get excited about GBTC is because I can hold it in my retirement fund. And I can hold it specifically in a Roth, not paying capital gains. If I buy Bitcoin directly, there's two reasons why I don't buy Bitcoin directly. First is I'm not that smart. I am a guy who I abide by your keys, your coins. If you don't have the keys and you just buy it in Coinbase, and you don't have the keys to your coin, or you buy it somewhere else, and you're just say you're just buying it in Robinhood or Cash App or something of that sort. You don't have the keys; they're not your coins. So that's the first thing. Well, that's the second thing. First thing is I'm not that smart. Second thing is I am incredibly horrified. I have had several passwords and things of that sort, or photos, crashes on hard drives where I've lost photos and stuff like that. And I don't trust myself with cold storage. I had a neighbor who actually trades Bitcoin. He trades all the cryptos, and he trades futures, and that's the way he makes his living. And he wound up having his SIM card on his phone in an airport being pulled. No, Christian, you can't. They don't let you do it in a retirement account, only in a brokerage. And that was as of last year, sometime in the middle of last year. So I may be wrong that they may have changed it. But let's see. Hold Bitcoin in my Fidelity retirement. To buy Bitcoin 401k accounts. Let's see. April 26th of 2 years ago. Plans to allow to put Bitcoin. Yeah, they're plans. Plans, that's the key. Fidelity, crypto, retirement accounts. They plan to. How does the Fidelity 401k that allows crypto work? Summer of 2022. I know their digital asset account allows you to do it. Will you be able to add crypto to your 401k? This is 401k. Yeah, it's up to the employer that allows you to do it. As of last year, I was not able to. So, let's see. Ways to invest in crypto. Ways to invest, buying crypto outright. They don't even say that they have an exchange. So that's interesting. As the market matures, more brokerage platforms, those who can buy cryptocurrency in a Roth IRA may have a potential advantage if the value of the cryptocurrency continues to appreciate. On the other hand, we should also think critically about the risks. And that's why I hold these things in my Roth. Well, I don't hold them, but I typically trade them in the Roth. Crypto at Fidelity. Fidelity, open a Fidelity crypto account. Boost your brain power. Learn more. All FAQs on crypto. Wah, wah, wah. IRA. Let's see. Oh, come on. Fidelity, how often, what? View all questions. Yeah, I think it's a crypto account. I don't think it's an IRA. Christian, you know more about this shit than I do. But that's essentially the reason I've traded since 2017 in GBTC and other stuff. I am dumb. B, I don't trust myself. BITO is not even in this. Yeah, but I ain't getting out of Fidelity. I mean, I have had many problems in the past with multiple brokerages, and right now I just have Webull and Fidelity. And so, again, I'm dumb. Christian, you know this. Come on, you've listened to me long enough to know this boy ain't smart. By the way, have you seen natural gas? Let's just take a look at Boyle. I have it in my notes. Take a look at it. It's up 6% today. I mean, you got confirmation now. It's on a run. Okay, let me look at my notes real quick and then, let's do the scans because I haven't done the scans. Scans. Okay, market scanner. Then we'll go down to the scanner here and we'll start looking. Boom, 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 boom. Cord. Ooh, Disney got a cross up. And we have Devon Energy. If you bought at 43, you are perfectly happy right now. You have confirmation above there. The algo got you in, I think, around this time, where it was trading around 41, 42. You're still in. Getting to that 200-day at 47. Going to be some resistance. I still think the 50's in the cards for this one. I think energy is a good trade. So, I like that one. I still hold it. Didn't buy down there, but I still hold it. Covered call ETFs, nothing there. Energy names, I think there's going to be a lot. Yeah, MRO. Marathon Oil, this one has just been a solid performer. XLE gets a cross up. I mean, I've said energy I think is a good trade, not hold. I sold it for some gains in in December, so I'm not restricted by a wash sale. But MRO, I really like this one, MRO. They have not. I mean, you look at the October. If we go back to October, back here, and you saw the big downturn of energy, this one's down 10%. That's just a correction. And it's under the 200-day and the 50-day starting to move positive. You have confirmation now. That's a solid one. I like that one. We'll remove all annotations, but I do like that one. And COP, same thing. I mean, COP, you can see even it did better, and it's just broken its 200-day. The 50-day starting to move positive again. Only thing is that the MACD is a little bit high. The RSI is a little bit overbought, but I like it. I like that one. I may be buying in some energy names today. Let's see about the levered ETFs that say UVIXY. We have a cross up. This one's interesting because the VIX has been UVIX, which is the 2 times levered. Let me just make a note. Levered. 3 times levered. The VIX is, it's starting to get higher. And as we continue to go down, I like COP or what MRO. MRO, I think it's the sweet spot right now. I think they're refining well. They're kind of the one that I like. And I like CVX. I like all those names. Okay, low cost. Let's look at the spider sectors. XLE crossed. XLE is the only one. Let's look at my not owned list. Do anything in this? There's nothing in this? Wow. Let me look up. This is one I want to look up. And I'm going to add this to my not owned list. This is a database company. It's gotten a pullback, but I do think that it's a good. I had a douche, somebody who listened to me when I said Frog's a good one. I like Frog. And she bought Frog and made a good little amount of money. But let me refresh this mofo. Why am I getting stuff that's... There we go. Scanner. And we just did the... we're going to do the Dow. Dow 30. NASDAQ. FANG. Oh, I already have that in the energy names. Diamondback. S&P. Oh, come on. Do S&P 100. There we go. COP, CVS, Duke Energy. We'll put Duke Energy. I think CVS is up because of that. It's down a little bit. This has just been a great run on that one. Duke Energy. I mean, this one, since we've gotten, the golden cross here at about 9, you got the golden cross at about 93, and you're at 95. I mean, look at the long term on this one. This is why this is a good one long term, because we dipped down below the 200-day. You broke the 200-day, and now you're on your way back to over 100. So, again, utilities are kind of in the play again. Yeah, that one's run all the way from 89. So let's look at, okay. That's awesome. Yeah, Duke was a good one. I mean, the thing about Duke and those utilities, I think what Duke pays like a 2%, 3%, maybe even higher, 4% dividend. So you're sitting there waiting and you're getting 4%. It's not a horrible thing. Year to date, past couple of days, 1.79. Over 1 year, you're down 4%. You're just trading your dividend for the performance. So it's not a bad place to, throw your money. I don't listen, Duke Energy. I am part of Southern Company, Georgia Power Southern Company. So, why the hell is this? Okay, hold on 1 second. George. Copy. Okay. Oh, stop. And then we're going to try pasting it again. No. Let's see. Copy. Pasting from iPhone. There we go. Okay. Now it's working. Okay, let me look at my notes real quick. Top stocks. You know what I want to look at? Let's see. Let's look at Apple. Because let's look at the peers. Apple, Dell, HP, blah, blah, blah. Now, here's what's interesting. When I go, and I did this yesterday, I think. Ranked 5. So it's number 5 in top technology, hardware, and storage peripherals. SMCI is the number 1 quant. Transact Technologies is the number 2. XRX Xerox Holding is the number 3. That's the quant rating system. And what I like is, if I go over here to SMCI, I can set an alert, and I'll do mobile, and I'll do quant rating. Select rating, when it moves to a hold. Equal or worse. Yeah. So the quant rating is now a strong buy. When it moves to equal or worse, it'll text me. That's how I love Seeking Alpha. Should have done that on the freaking podcast, but I really do like this. Pragmatic Investor. I'm going to do an interview with him. On Tuesday of next week. That's going to be posted on his YouTube channel. I'll probably ask him, can I post it on my YouTube channel as well? But we'll see what he says. Midvision Pro Buzz. Okay, I gotta go get my water too. You boys gotta drink. Let's see. AbbVie. Shares of API fell 5%. Agreement. Calon Petroleum. Walgreen Boots rose 1%. Better than expected results. Mara is most active. Tesla. AMD down at 135. Okay. I've got a bunch to go over. Let's see. I've got Apple downgrade, SOFI downgrade. Where's my I bought SQQQ note? There we go. I'll take these and I'll put these up here. And we're going to cut these out. There we go. Okay. XLV. Let's look at the sectors, market data. I read that as yay titties when you said utilities. Chris, you're retired too? High five. XLV hit a 52-week high yesterday. Let me see. It closed at 138.55. Yeah. This is healthcare. I mean, you know, XLV. Look at this run. XLV in the algorithm got you in November 13th, so mid-month. It was part of the laggard group, but you're up 10% in this one. That's crazy. That's just nutso. Okay. That's awesome, Chris. 46, you beat me by 3 years. I did it at 49. and since you're 2020, I did it in 2020, so I am at the end of this month. It will be 4 years. I am retired for 4 years, and that is 4 years where I have worked part-time. The first year I did part-time with really part-time. The first year I had severance and I had unemployment through COVID. And so I was able to live off of that. Then in the following year, I worked for MLS part-time and I traded heavily in 2021. So I was able to make a pretty decent income that year. Last year, I worked part-time for MLS, and I did the podcast, and those were my two sources of income. I didn't trade significantly because, and you guys will appreciate this. I mean, you guys sit back and you can trade, but I can't trade. Well, I shouldn't say I don't trade. I do swing trade now. But in 2021, when I was trading heavily in 2020, I did significant day trading. I mean, we're talking scalping for 1%, 10 times a day to make 10%. My goal was to make, and I did it most days, was to make $1,000. And I should say it was to make $1,000 of income if my portfolio did not make a positive gain. And in 2020, those were not many days where you didn't make a positive gain after March, because you had some really big green days. I mean, you could pick a stock like Tesla and you could make 15-20% in a day on Tesla. You could pick an oil stock and make 15-20% in a day. So, I mean, it was like shooting fish in a barrel. It was great. But, yeah, thanks, Scott. I mean, listen, and I think Chris will tell you, there's a lot of luck involved, a lot of planning, a lot of things that you try and do. But you really have to, to focus on a system, focus on, doing things right. You don't always get stuff right. You get a lot of stuff wrong, but it's about sticking to it. Okay, let me open up these links here so that I can look at them. I don't have that many links, to be honest with you. Instagram, we're going to do douche of the day here because I found this, and this was interesting.
Jamie.
And there we go. We're going to do the douche of the day. We're going to open that up. We're going to open this up. We're going to open this up. Dan Niles. Yeah, Chris, I think you'll agree that living cutting your expenses is probably. And I did like I said, I did a fire podcast. I think I did 3 or 4 episodes, and it wasn't a huge. I mean, there's not a lot to financial independence, retire early, other than you want to maximize your income and minimize your expenses. And if you can do that, then it's a good life forward, and you kind of buy your time back. As your portfolio gets larger, as your income becomes whatever, you can, ooh, AMD just upgraded. Let me put that back in. AMD pullback upgraded by KeyBank. 70 price. Okay. I've got DraftKings, CrowdStrike, Snow, PenW, Mara, GBTC, BITO, AXP upgrade, SOFI downgrade, Apple downgrade. So I've got a bunch of single stocks to go over, but that's a good one, Joe, because you and I are both in AMD. I know you're in at AMD. I was adding it between 100 and 109, I think. Not heavily, because I've already got a bunch of it at 80. And I didn't want to go, I still have a good amount of NVIDIA, not a ton. I want to get more. But AMD, I mean, shit, this one is down 0.2%. That 50-day, if it doesn't provide support, I mean, look at this one right here at 120. The algorithm gets you in at 129. And you're still up. It hasn't gotten you out. It will get you out today. Just looking at the moving averages and things. But RSI is at 41. The MACD has come down. The last time the MACD was down here, we were trading at 117. You're at 134. It's putting in higher lows. I mean, after this golden cross, you're putting in higher lows. So, yeah, I don't think anything in the 130s is a horrible place for this one. If you look at long term, we're still in an upward trend, and you still have confirmation over that 9-day. I don't know that it will continue. It's an incredibly expensive stock. As a whole, it's incredibly expensive. As a chip stock, it's not that expensive. NVIDIA is even cheaper, to be honest with you, at this point. But AMD, I think, I think AMD is going to kill it. I just do. I mean, their PE is a little bit expensive. It was up 108% last year. Year to date, now it's at 8%. I would probably wait, if you're kind of counting your pennies, wait for another 2% down. A 10% pullback on a stock that was up 108% last year is not crazy. So I like this one. I like it a lot. And AXP is in my wheelhouse as well to look at, because they just got upgraded with a why is this doing this? Man, I may have to restart. Don't tell me I have to restart Safari. But I'm going to start off with SQQQ. Okay. I'm going to start this puppy up. Okay. If you're new here, hit the thumbs up button. Make sure you're subscribed. I think 80% of the people that tune in don't subscribe. I'm here every morning. My name's Gary. It's the Daily Stock Pit Podcast. You can find it on all major podcast platforms. If you are interested in any of the links, the link tree down below, it's this. I'll explain it during the podcast, but just make sure you hit the like and subscribe button. I am an influencer, so therefore I am a douche. Oh, and if you want to know the rules of the podcast, they are right here. The rules to follow next year in a nice format for you. So let's see, 1476. We're up 1.17. I have a feeling, and it's just a feeling, while we're still going down, and I do think that we continue down this week, I have a feeling the reversal is going to be fast and extreme. Don't ask me why. AXP is good, Scott. No, you don't judge. Just win. Okay. My girlfriend pointed out yesterday that I had a good start your year off with the right tools. I am going to be, by the way, if anybody's new, anybody's just listening, I'm trying to get myself motivated to do a tools video this week. I've got 2 videos to put out. One that I did with Jason from Trendspider in November, which has a killer Apple strategy in Trendspider that I should just release. I think I did. I hope I did. If I didn't, I'll put it out there. But it's phenomenal. I don't think I saved it, though. Is this it? Let me see. Let me go to Apple and look. I don't know if this one's it. No, that one's not it. Is this one it? Apple's favorite SMA? This one may be it. Yes, this one's it. This one's just a phenomenal. It's a 1 hour on Apple. It's a 1 hour chart. It makes you over 4 years 196% versus 139%. If we trim this down to just, let's say 1,000 candles, which is typically what I kind of test on, this goes back to 6/3/2003. So about 6 months. It makes you 9% versus buying and holding loses you 0.3%. So everything that I've done on testing on this one, it makes you money. And I need to put this out. I just need to put this out. Honest to God, it's just, I'm lazy. My algo over 1,000 candles, which goes back 24 months, makes you 32% versus 2.8%. But Jason's one is a solid strategy. So, and I need to put that out. So, if I get 5 people who sign up for Trendspider over the next week, now, you know what? 5 people in the next day, 5 people over the next week is easy. Shit. Everybody loves Trendspider. Boy, look, Cleveland Cliffs down under 20. I got out of that one with a nice little gain last year. I'll add back into it. I think it's a $30 stock. Goldman Sachs down. I bought that 300. I got rid of that one after 10%. Nvidia's up 1%. Pepsi's down 1%. Qualcomm's down 1%. Okay, let's get started on this. Okay, I'm gonna hit record. Let me get my water real quick. Hi, girls. Okay. By the way, I heard that Rich Dad Poor Dad is 1.8 billion in debt, and his reason for that, he said, if I go down, the bank goes down. What a douche. What a douche. I mean, why would anybody listen to that douche? What an asshole. We got a douche of the day, though. Okay. Good morning. It is Thursday, January 4th. And if you read my newsletter yesterday, time to buy SQQQ, and I put a question mark in there. Wasn't sure. I put 3 charts in here. Here are the charts. This is a chart in the 4-hour algorithm. I said we've lost confirmation and the algo will most likely get you out, blah, blah, blah. I then put a daily chart in there, seeing a gap at 378 to 382, which may provide some downside once filled. This is in QQQ, and this one is in QQQ as well. And then I went to QQQ on a weekly, and it's all pointing towards downside. So what I looked at the chart that I put in SQQQ last week, and I said, I'm just waiting for confirmation. Well, here's your confirmation. It is above the 9-day. It actually got it on January 2nd, the first day. I just didn't buy it. Wish I would have bought it at $13.80. I got it around $14.50 in pre-market. We're at $14.77. Actually, market just opened up. So you can see we still have confirmation. We're just crossing that 50-day. If we cross that 50-day and that 50-day starts to turn, we actually have a significant turnaround. And I think you're looking at probably these volume shelves at about $15.50 or so to take. I bought about $9,000 in here. My hope is to put about $20,000 into this. Take a quick profit. I don't want 10%. I'm not looking at 10% because I do think the long term of this is a significant, you're going to lose money. Just going short in SQQ, you're going to lose money. So I want to get in. I want to get out. My stops will be pretty tight. I'm not going to do it on an hourly basis. I'm going to do it on this 4-hour. Right now, I've got a little bit of gain, not huge, but I will be putting more in. I do like this one to get above that 50-day. I like it to get it to about 16 and then start to see a pullback. If you're not subscribed to the newsletter, this is the kind of stuff that I put in there. I put all these charts in there. It's all free. dailystockpick.substack.com. I do have a weekend paid newsletter that provides you a little more education, and I'll put a little bit more reasons why and a few more charts. And typically I'll guide you on long-term trades that I'm doing, nothing like a day trade. This is more of what I call a swing trade. This is something that I probably will not hold on a Friday. So I will probably get out on Friday and then get back in on Monday. That's my way to treat these triple levered ETFs. I just don't like holding them. One reason that we're seeing not a reason, but a reaction to the turnaround here is just stocks that have been not loved last year. XLV hit it hit a 52-week high. If we go over here to Seeking Alpha and we look at XLV, you can see these sliders over here. And I use these sliders on the right-hand side. You can see the day range and the 52-week range. Healthcare is right here. It's at its high. So is it going to go higher? Not sure. Maybe. Financial services at its high. What's pulled back? Consumer staples. Utilities. Utilities was way down here, close to 50. And you're trading in the 60s right now. So you can use these sliders to say, okay, where do I have an opportunity? What's trading at the high? Right now, financials are taking off. Today, you're up 0.75%. You can see the indices right here. Look at these 52-week ranges. S&P close to the top. Dow Jones close to the top. NASDAQ close to the top. So it's no reason I wanted to short. That's why you look at these kind of things. And Seeking Alpha is just a perfect place to look at it. Now, Dan Niles, if you don't know him, he's a hedge fund guy. I really like his picks, and he's on CNBC a lot. Here's the interview link. I will include this link in my newsletter. It's a link to his CNBC interview where his top 5 picks for 2024 are Amazon, Meta, Texas Instruments, XBI, KWeb. I'm not 100% on his picks for the year, but I do like his reasoning. And what you'll notice, and this is why I say, do not trust a douche on the internet. Well, Dan is not a douche on the internet. When you look at this, he gives out his reasons for each one. And if you go to his Twitter, he will post reasons for each one. Here's the KWeb. Here's the XBI. Here's the Texas Instruments. Here's the Meta platforms. And here's Amazon. And he gives you reasons why. Understand, that's not a douche on the internet. He is giving you his opinion. He doesn't know if they're going up or down. He just says, hey, here's our top picks. And he's putting his money where his mouth is. He's talking his book, Satori Fund. But I do like him. And I like this list. So go and read that. I won't post the charts, but if you want me to chart it, comment down below. If you're listening on Spotify, you can leave a comment down below if you want me to chart one of these. Or you can get in contact with me on any of the social platforms. Any of the social platforms, they're all up here on the link tree, linktr.ee/daily stock pick. You can sign up for Trendspider, Seeking Alpha, Webull. I was just in the discussion on YouTube. I have 2 brokerage accounts. I have Fidelity for my big account because they do provide brokerage services. Webull does not provide as big brokerage services as Fidelity. So, but I do like trading on Webull. So I've got about $4,000 in Webull. I really, really like it. So I won't downplay it. But the app is why I do it. If you want to put some money in, I started last year with $1,000. I really just wanted to experience it. I really liked it. And I've been trading it ever since. I like it more than Robinhood just because I can get my money in and out of there much easier. And I don't know if Robinhood is still like that, but I wanted to make sure that I had easy access to my money. So I transferred in and transferred out. Here is the 4-hour on SQQQ, so you know. We opened up at 1484. Right now we are trading at 1477. So it's on its way down. Maybe the Nasdaq's coming back. I don't expect it to. I expect it to bounce around here. But overall, I expect this week to be down. I don't think 1450 is going to make a killing, but I do like this for a certainty trade. Now, let's talk about some other ones. Apple. There was Deepwater Asset Management made a prediction that Apple's going to buy Peloton. This one makes sense. I will include this link to this article in the newsletter, and you can watch the video. It totally makes sense. Apple Fitness is a freaking joke. I don't like it. I've used both Peloton and Apple Fitness. Peloton by far is a superior product. This is up 10% today, most likely on this news. Because the actual acquisition of Peloton would not be a bank breaker for Apple at all. Hold on. Okay. My dog got up, so I just had to see it. So Peloton, I can't. Here's the thing about buying a company. If you're just going to buy this just because Apple is rumored to buy it, probably not a great reason. If you haven't used a Peloton bike, if you don't like a Peloton bike, if you think they're overpriced, probably not a great reason to get in here. You do have a gap up here to $6.80. I would guess that they would buy it for somewhere in the neighborhood of $10 a share, which would double your money. If you look at this, is just a dead weight stock. Understand, Peloton is still expensive. They are not making money. Well, let me see if they're losing $1 billion and they don't have a lot of cash on hand. They have less than $1 billion of cash on hand. They may need to dilute, but they may be looking to sell as well. They're down 7% year to date. You're in the 4th day of the year and they're down 7%. But today they're up 8.5%. So short term, it may make sense to put some money in here. You may put some lunch money in here. Make a couple $100 every now and then. But I don't think long term, I would put your stop loss probably if you're trading it right now and you're buying it at 585. I would probably put your stop loss at about 539. Let's see where it opened up. I would put your stop loss at 531. That's where the current candle is. So that's how volatile this one may be. I'd just look at maybe even on the 65-minute algo. Let's see about on the 65-minute algorithm where Peloton is. It's got you out. It'll probably get you in right now. When it crosses up on the 8-day, it's up on the 9-day, so it's probably going to get you in the next candle. So 590 might not be a bad buy. You might be going up here to 629. Not a bad scalp play at all, I don't think. But I'll include that article about Apple buying them. Apple also just got downgraded by Piper Sandler. We can see it's down another 1.29%. Algo got you out up here at 193. That's where you should have been trimming. That's where you should. We talk about button hooks all the time. The button hook up here was clear as day. I was trimming in the 190s, even if you didn't get out in the 190s. I think the high 180s was good. Now you've created a gap here between 191 and 188. That will get filled at some point in time. This one is becoming extremely oversold. The RSI is at 20. Look at that MACD just going down. If you get down into the 170s, you've covered this gap down to 185. Right now, you're playing with that 200-day. If we look at what everybody looks at on Wall Street, which is the daily, the 200-day is at 179. If you break that 200-day, I will tell you, just start buying it. Just start loading up because this is the safe money. You may be going back down here to double fill this gap at 166, but start dollar cost averaging your way in here. The thing about Apple is as it becomes oversold, you're going to start to see buyers start to show up. Doesn't mean that this one's going back to 200 anytime soon, but later this year, I don't think it's not out of the realm of possibility that it goes back. But again, they got downgraded. If we look over here on FinViz and we go to Apple, the PE is 29, the forward PE is 25. That's expensive for a company that has declining revenues over the past 4 quarters. Super expensive. Year to date, you're down 5%. That's not huge. You could get a 10% pullback on this one easily. Last year was up 46%. Declining revenues and the stock was up 46%. Target price, 197. Now, the most recent downgrade, Piper Sandler, they only brought their price target from 220 down to 205. The one on January 3rd, which was yesterday, that one, D.A. Davidson brought it down to 166. Now, Barclays brought it down to 160. So you're seeing lower price targets on this, but we've always had lower price targets, and they've always said it's overvalued. Buffett just buys a ton of this, and then Apple buys their own stock back and retires it. So I'm not necessarily selling out of this. I'm not trimming it here. I still think it's a good buy. If it touches this 200-day on the daily, I may trim some. In my retirement account. That's not tax events. So, but I wanted to make you aware of that downgrade. Another downgrade, SOFI from yesterday. SOFI stock took a huge hit yesterday. Algorithm got you out with a 20% gain yesterday. Probably should have seen it here where the button hook was starting. Again, the algorithm won't time things. This one is extremely and quickly oversold. Today, it's down 0.84%. I would expect it to hold here at the 200-day at 812. If it doesn't, I think you're looking down here at probably $7.34 for a support level. That would be where my guess would be. But you've got this thing just sinking and diving. I think it's a good company. Just, that they bring up that lower rates, and this was part of the downgrades. Lower rates are going to hurt this company, and it's incredibly expensive. The forward PE is 108. This one was up 82% last year. It's down 17% in just, 2-3 days of trading? The average target price is $9.12. I still think it's a $10 stock. You can see the downgrade year underperformed. They brought their price target from $750 to $650. I think it's a good one. I don't think it's a horrible one. I think it's a good bet, but I probably would wait on it just based on this algorithm getting you out right now. I'd probably wait for it to come down a little bit just to see if it does break this. If we start to get a gap fill on this one on the way up, I think you're fine pulling that one in. AXP was upgraded. This is American Express. They were upgraded with a price target of 265. Now, the algorithm doesn't have you out on this. Right now, it's still got you in. It is up 0.47. This is not one that you necessarily trade. This is, that's just a crazy move. But the move was because it was down near its 200-day. Just starting to get back up. Look for resistance around 197 or 200 if you do get into this. But AXP, if we go over here, it's not crazy expensive. It's a credit card company. MasterCard and Visa, I think, are cheaper. You can see the PE is 17. The forward PE is 15. Last year, this was up 26%. Year to date, it's down 0.3. But let's look at Visa. Visa and MasterCard, look at their PE, 31, 23 for Visa. And if we go to MasterCard, which is MA, 36, 29. I mean, again, I don't think AXP is that bad of a buy. I think here with a $265 price target, I think you're good. Boyle, what I noticed was that if we go over here to FinViz and you go down to the bottom left, you'll find your commodity prices. You find oil is up 0.4, but natural gas is up 4.42. Yesterday, Boyle was up again. And today we're up 3.42%. Look at this since the algorithm. If we just clear this one out because you were up 17% in 20 days, but the algorithm got you in down here at about 25.71 on December 14th. Oh, stop. I don't want the text. We're going to put this one in. Right here, you're up 32% now. 32%. And you have confirmation. Do I think this one's getting up? I think this gap at 40, I would say 40, 38, 40, probably within realm. It's not out of the realm of possibility. This is a triple levered ETF. Understand, this is a decaying asset. This isn't something that you want to hold on to. So Boyle is a good play right now. DraftKings, I sold out of this late last year in December when the algorithm kind of said, hey, it was on its way down, sold out this. Once it lost its confirmation, I wanted to get out, just said, hey, I can always get back in. But I'm looking at that 200-day right now at 31.98. That one right there, I think it's good. I've always said $30 is the swing on this. And when you get above $30, when you lose that confirmation and you get out, you just get out. Now, the algorithm makes you 26% versus 23% buy and hold. You win 30% of the time. Your average win is 23%. So you have to know when to get in. I'm not saying get in right now, but I am looking at that 200-day and maybe this gap fill down to 29. If we get under 30, I'm loading up on it again. I'm just going to load up on it. You're at the end of the NFL season, college football. The playoffs are next week. You're probably going to have some pretty good press on DraftKings. We just had some dude who turned $7,000 into $500,000 in New Jersey. Here's CrowdStrike. CrowdStrike got you out with a 32% gain. This is a solid company. I'm in at about 180. I think 185 is my average price point. If you look at this one on long term, I think you're fine here. And I said all-time highs at 300. I think you're going to it. You still have confirmation. Would I get in right now? No, but on this pullback, there's an opportunity to look to add to this. You're under the 9-day. You don't have confirmation. Your MACD has fallen quickly. You've quickly become oversold. Right now, you're up 0.72. Look for this one to come back. Snowflake, same thing. I own this one. I trimmed a little bit of it when it got here to 200. Haven't trimmed it since. I still own some. I think my average is about 150. I'm not looking to trim it, but I'm looking to fill this gap down to 176. I'm looking at that golden cross as being, the 50-day starting to move down again. We broke that. Look at the MACD, how quick it's falling. Now you've quickly come oversold. Your RSI is at 30. You're down 0.28%. Look for this one to have some type of bounce back, but understand it's expensive. And we're in this range. Remember, a few weeks ago, months ago, I said this is the range. 200, and it's coming down to 130, 140. When you get under this line at 158, start buying. That's where the 50-day is right now. So I like Snowflake there. Pan W, same thing. We got to 300, started turning over. Algorithm got you out with a 22% gain. Right now, the algorithm on this one, it only makes you 17%. You're providing some safety. Buying and holding on this one 24 months ago, you made 65%. This is the largest cybersecurity company. Look at how quickly that MACD has fallen. Look at how quickly the RSI has fallen. You've quickly come to this oversold area. Now, am I buying in on the first time when the algorithm tells me? Only if I have confirmation. Only if I have confirmation. I was trimming. I'll take that money and I'll buy it back lower. AMD just got an upgrade from KeyBank with 170. We'll go over to FinViz once I show you. It's turning over. Algorithm has not gotten you out yet. Look at this one. You had a nice 19% gain. And then you wound up 19% gain just to the next algorithm get it. Here, the MACD's turning over. It crossed down. You've created a gap above at 144. You are up 0.37%. Quickly became oversold. If you want to start playing the market and you want to start just scalping these, you absolutely can, because as the market goes down, there's going to be an opportunity to go up. Just remember, long-term trends matter. You want something that has higher highs and lower highs. You don't want something with higher lows and lower lows. You want something in that long-term upward trend. Here's Marathon. Marathon Digital Holdings, MARA. One of the most active stocks out there. This is up 1.41%. We saw that turnover. The algorithm hasn't gotten you out. Look at that MACD quickly come down. You never got to oversold territory. I'd be very careful of this one. I do think it's a $30 stock again. We touched 30 up here. I absolutely should have sold. I may hold this one long term, but this one's a Bitcoin miner. It's going to go on Bitcoin. I do think that Bitcoin, the ETF, is going to have a super, super positive outcome with Mara in particular, because remember what Mara does. All of the Bitcoin transactions, they are confirming. This is one of the largest. And what do they earn when they confirm? They earn Bitcoin. So as the price of Bitcoin goes up, the price of Mara should go up as well. As the transactions go up with the Bitcoin ETF, which makes it easier to buy and sell Bitcoin, that will benefit Mara. It is incredibly expensive. Mara is amazingly expensive. They're not making money. They're losing $357 million. They have somewhere in the neighborhood of $300 million. They may dilute. Maybe. Not sure. You can buy any of the miners. But you can see October, Bernstein Initiate, $8.30. Their average target price is $13.72, and you're trading at 23. So it's incredibly expensive. I would trade it. GBTC, we talked about this one. They are in talks right now with none other than JP Morgan, in talks with Grayscale about Bitcoin ETF. Well, GBTC, you have confirmation. It's at 35. We're in this historic run. What I wanted to play you, if you remember, Jamie Dimon said Bitcoin is a crazy, crazy he said it's just junk. Don't believe anybody. Here, I'll include this link in the newsletter, but I'll play it for you.
On September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
Yeah, no, not illegal.
He says it's a fraud. It says he'll fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, so unethical.
Yep. That's Jamie Dimon. That's why listen, Jamie Dimon also was in charge of JP Morgan when they took Epstein's money. I'm just not a fan. Not a fan. He's our douche of the day. Complete douche of the day. Just don't like that guy at all. I do like, by the way, right now, oil. Oil is up. We've got a couple of oil plays that are in play. Exxon, which is in the core portfolio. I've got Exxon 102. It's at 103. It's down a little bit. It's up 0.454%. You wound up getting it open at 104. I do think you get back to the 200-day at 107. It's not a huge move, but Exxon is one of those where I think you could probably hold it for a while. If we look at the weekly, you're nowhere near the 200-day. So you may have some significant downside on this one if the price of oil continues to go down. There's another one in the cross up in the scans that I like. CVX, kind of the same thing. I think you could buy this one, CVX, with the algorithm set at 145, but this one's closer to its 200-day, right here at 155. There is a gap up here at about 164. I don't think this is a bad one to buy if you want to hold it through the year. Oil with the Mideast stuff, shipping. If you look at yesterday's newsletter, I included a link to shipping Maersk and all the shipping stuff. You can find all of the shippers in this article right here. Look at this. Just the list of shippers is right down at the bottom. So yesterday's newsletter has the list of shippers. I do think that it's an opportunity for you to get in there. I think oil is similar with the Mideast crisis. I think it's just, if you want to trade it, you can trade it. I do own Devon. I do own Oxy. I own some of that stuff. I may buy Marathon Oil, which is the cross up today. But I thought it was interesting to point out that I think CVX and XOM, with the price of oil going up, might be an opportunity. Eli Lilly. And let me see if I can find this real quick. Eli Lilly, I'll post an article to it from Seeking Alpha. Eli Lilly just notified that, offer at-home delivery for weight loss drugs. This is the article that I'll include in the newsletter. This is huge. And it's enormous because weight loss drugs are expected to be and I listened to a podcast yesterday about weight loss drugs. It's interesting because for the first time in history, for the majority of human history, we've been at a caloric deficit. And now you've got a caloric abundance. And so I just think, and I agree with the podcaster, we're creating a solution to a problem that we've already created, and we don't know the outcome of the problem we created versus just creating another problem, which is the pill. But the Eli Lilly is trying to mask this, I should say. They're launching a direct-to-home where you can get it directly from the company. It's called Lilly Direct. It means, so let me just put this bluntly, the list price of Mounjaro, $1,060. Eli Lilly Direct will sell it to you as a consumer for $550 directly. If you don't know, there's these things called pharmacy benefit managers, PBMs. And what traditionally PBMs do is they buy the drug directly from the company. You had to be a PBM in order to buy the drug from the company directly. In order to do that, you had to set up this PBM. Well, there could be 7 or 8 PBMs in the mix. So between you and the actual drug manufacturer, there could be 7 or 8 PBMs. What do these PBMs do? They take a slice of the profit. So that $550 that Eli Lilly is willing to sell it to you for, they may sell it to a PBM for $552, but that PBM is going out and selling it to pharmacies for $650. So they're making $100 on every dose of this medicine. Now with insurance, this Mounjaro costs you $25. So who's covering that? It's the drug companies. Again, Eli Lilly wants to make the insurance companies pay for this. Eli Lilly is going to sell it to you for $550 with a doctor's prescription, or you can go through your insurance for $25. And you know what the insurance is paying? $550. So who's getting the money? The manufacturer of the drug, Eli Lilly. And we're just in the beginning stages of this. It's huge. It's enormous. I really, really like this one. I will include in the newsletter, I took pictures of what happens the year after a 20% gain. And it's all from CNBC. I'll just post the pictures that I took on my TV screen. It's pretty significant because S&P 500 gains of 20% aren't too rare. 26%, of the S&P gains since 1928, 36% have been 20% or above. 2% have been 10 to 20%, and 15% have been 0 to 10%. There's been 15% declines of up to 10%, and 12% where the S&P went down over 10%. So that's kind of interesting. S&P performance after a 20% gain. Up frequency, 65%. Down frequency, 35%. Average return, 8.9%. Average gain in up years, 18%. So 65% of the time you're getting up 18%. So back-to-back 20% gains for the S&P. There have only been 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 of them. Now what's interesting, of those 9, we've had 1, 2, 3, 4. Not 4 of the 9 have been since 1990. So, in fact, 1995. 1995, 1996, 1997, 1998, 1999. They were all up 20% or more. That was the beginning of the dot-com crush, if you will. Let's talk about social requests. Owls1710 asked me about NVIDIA, and I think he asked it on a very old video. And my apologies if I hadn't gotten to it. NVIDIA, you're in this range. I mean, this is the trading range that I've outlined for weeks now. This goes all the way back to August. And I said this is between 505 and 405. I mean, 400 and 500. That's your trading range. Are you buying it here at 478? I don't know. I mean, you know, the MACD's kind of crossing down. The RSI is kind of getting up there. It's another trade. I think it's extended. You have your earnings coming up, I think in February sometime. It's nothing that I'm tempted to add to. You're below your 9-day. It's just nothing. Right now, I wouldn't do it. Do you want to hold this in your portfolio? Yeah, I do. I trimmed some at 500, but didn't sell it all. I think when you get to that 500, you're going to see significant resistance. And I don't think you get above that until we have some type of resolution of this bull market pullback. So Joe from Facebook, BITX has been my friend, got in at 998 share a few months ago. BTC was 26,000. BITX, this is a Bitcoin strategy, 2 times levered on Bitcoin. Just got you in at 2250 on the algorithm. You're at 2426. If you think Bitcoin's going up, I mean, this is the crazy thing. Look at how much this is pulled back. BITX, again, 2 times levered on the Bitcoin strategy. This is a great one, Joe. I love this one. And he's in at $9.80. So, I mean, think about that one. Fatima Ben Sharif, what is the usage case of Bitcoin? Most governments are against it as it gives them no less money control. Most people buying Bitcoin only to sell it higher. Do I miss something? Thanks in advance. Fatima, that's the whole point of Bitcoin, is that it's not levered by government manipulation of currency. You can, we talk about the dilution of shareholders all the time with things like, Peloton. Peloton, for instance, they don't have enough money to go on. They're going to need to dilute shareholders. That's what the government does. They dilute shareholders by just printing more money. What do you think our deficit is? That's essentially what the government does. And so Bitcoin isn't in that control. And yes, governments hate it. Yes, governments can outlaw it. They found a way around that. You think Chinese people don't invest in Bitcoin just because the Chinese government says that you can't? That's crazy. So I think you hit it on the head. What's the use case of it? The other thing is the blockchain is, the blockchain has been incredibly beneficial. Now, Bitcoin, the trading of Bitcoin doesn't necessarily get you into blockchain and stuff like that. Blockchain is just kind of the white paper that Satoshi wrote. But I do like that Bitcoin has held up and been around. Remember, shares of a stock are just what the market pays for it. Shares of art are just what the market will pay for it. Shares of Bitcoin are only what the market will pay for. If you don't have volatility, if you don't have the risk, if you're risk adverse and you don't want to hold Bitcoin, don't hold Bitcoin. We just saw Jamie Dimon said Bitcoin is worthless. And you know what his traders are doing? They're trading Bitcoin on his news. So obviously somebody likes, when I listen to billionaires, they're like, yeah, I got, a few $1,000,000 in Bitcoin. It's doing well. I just kind of forget about it. To me, it's an indication. Hey, I don't want to listen to a douche on the internet, but I do know Bitcoin has been around for quite a while. Do I think it's going to zero? No. Do I think it's going to 100,000 this year? No. Do I think it's going to 500,000 like Kathy Wood says, or 1 million? No. I think Bitcoin is a trading tool that you can use and you can trade. It's as simple as that. I don't think there's a use case for it. Do I think people are, the guy who bought a pizza for 9 Bitcoins, that's worth like $1 billion now or something, way back in 2017, 2016? He's regretting his decision. But, you never know. You don't know that that's going to happen. So Jonathan from Spotify. Do you think LNG is a good idea? This is Cheniere Energy. And I've said, hey, this is a good one. They basically take low-cost liquid natural gas and export it. You can see the MACDs just kind of hovering around as we sit here. The algorithm has you out. You're using this 200-day as support level at 168. It's up 2% today. I don't think there's any catalyst that's going to send this one flying back up to 180. You're at all-time highs here. Your upside is probably limited, but you can see kind of a double top here at 182. I don't think it's a bad idea. I just think that, again, you're probably just sitting there waiting for this one. If we look, I think the dividend, it's 0.96, so it's not a great dividend. It's up 0.52 year to date. It was up 22% last year, while natural gas was down. So it's an interesting one. I think if you're interested in natural gas and you're interested in commodities, I think this one's going to return a decent thing. But natural gas is just going down. So I'd be a little bit careful of this one. Bisco from Spotify. Thoughts on CTSH? Seems like a fairly cheap stock for AI adjacent area. Started a small position as it's pulling back. Let's see. CTSH. Let's look at this. CTSH, Cognizant Technology. I don't know anything about this company. Looks like it's pulled back. You still got a gap down here to 73. Not horrible. Let's take a look at the long term of this one because it's probably, you have a significant downturn of this one down to 57. You've crossed your 200-day. You've got a solid, weekly confirmation above that 9-day. Your all-time highs are up here at 90. I don't think it's horrible. Let's see what the valuation is. CTSH, right here. They do technology, information technology. PE is 18, forward PE of 16. Average target price, 72. You're trading at 74. Most recent, today, Wolf Research, underperformed to peer perform, upgrade. December 14th, Barclays, upgrade underweight to equal weight, $61 to $75 price target. Your average price target is right around where you're trading. Insiders, looks like they're just optioning exercise. They're selling at like 62. Nothing huge, though. I don't think huge. Listen, I don't know what they do. I don't know. We can look at, let's look at CTSH. Let's look at the quant rating on this one. Because what Seeking Alpha can do for you is if you take a look at this, they're all saying hold. So I don't think it's great to buy it. I think it's just capitulating. If you look rank in industry, 8 out of 26. The industry is top IT consulting and others. The top one is DPSI. So I would, look at DPSI. Let's see. Quant rating buy. 1 year, it's down 25%. What do they do? TPSI, let's see. Through its engages in designs, consults, and implements mobility enterprise solutions and services, provides managed professional services that enable customers to implement. I don't know. Doesn't get me excited. CTSH, I think you're up there. Dex from Spotify asked about GBX. I have no idea what this is. You guys come up with some strange names. Greenbrier Companies. Let's see. You got some gaps here. Looks like you just crossed your 200-day is moving negative, but your 50-day you had a golden cross here. 35.79 is where the algorithm got you in back on November 2nd. So you're traveling up. You're up 25% from there. The algorithm makes you 22% over 2 years. You lose 5% if you just buy and hold. You got gaps all over this one. It's a little bit extended right now. Looking at that MACD, it hasn't been up this high since it was here. Let's take a look at the long term of this one. You just kind of cross your 50 days crossing up on your 200-day. So it's just kind of getting back to where it was in 2021 at 45. GBX, let's look at this one. GBX, Greenbrier Companies, $1.4 billion market cap, 23 PE. Forward PE is only 12. You were up 2% year to date, 33% last year. Average target price is 43. You're trading at 45. Most recent, Susquehanna in October, neutral to positive, and they have a $50. I think your upside on this one is limited, but you are in an upward trend. I'd probably wait for a pullback on this one because it has been, 33% last year's nothing like the grade 8, but it is a good year. So I'd probably wait on that one. George from Spotify. Hey, Gary, Happy New Year. I know you're a technology bull, Apple especially, but how do you feel about TECS here in the short term? Capitalize on some January market weakness. TECS. Let's look at this chart real quick. This is Direxon Technology, bear 3 times shares. So it's a bear 3 times. So the algorithm has you. This is triple levered ETF. Just understand it's a triple levered ETF. You have confirmation. I'm in SQQQ to diversify a little bit outside of technology. If you're looking to buy this one, I think you might have this $12.39 gap in play right now. The only question I would have is, put your stop losses in tight. Look at this run. I mean, if you just bought this, what the algorithm said on December 21st, you're up 13% right now. That's a pretty good in 14 days, 1% a day on a triple levered ETF, and you've got a gap below here. So you've got some type of gap that is filling in. The Bollinger Bands are expanding out. You're outside the top of the Bollinger Bands. It's a little bit risky in my mind as far as, do you really want to go that heavy in after you've had that big of a run up, specifically on the algorithm, and you've got these big candles. Those Bollinger Bands are expanding out. My guess is that this gap at 1241 might come into play. I don't think it's a bad play, to be honest with you, George, if you want to put some money in there. But just understand it is a decaying asset. And so when you look at this long term, technology has just been a super bull. I would not want to stay in this one long term. I would definitely do, like you said, capitalize on some weakness in January. This week should be down. I probably wouldn't hold on to this over the weekend. We're seeing a little bit of a rebound today in the markets. If I go over here to, let's say, market data, the S&P is up. The NASDAQ is still down 0.08, but it's coming back. So we're seeing a little bit of a pullback, pull up right now in the midday. Might be a little bit dangerous, but I like it. I mean, TECS, you know what? I'm going to add this to our triple levered ETFs, levered ETFs. I'll watch it. We'll add it to that list because that's a good one. I like that one. And TECL might be, TECL is the long one. That's the one where I think your play, to be honest with you, since we've run so much, and I do have TECL in the long term, I think your play is not necessarily to get into TECS. I think your play on this one is to look when TECS starts to cancel and then get into TECL. In my mind, I think that's a better use of your money to be patient because you don't know how long this pullback is going to take. We may get some news out of something. I mean, I'm seeing the market kind of turn around. Palantir's up freaking 1.74%. So I think, George, what I would probably rather do is TECL. Wait for the it's kind of like I did with TQQQ and SQQQ. Wait for the turnaround, wait for some confirmation, and then get TECL. I'll put the chart in there for TECL for you in the newsletter. Scans. Disney. It's down 1.53% today. We did get a cross up here at 91.37. Got a cross up. If you're interested in Disney, I think you can buy it. I think you get under 90. Right now it's at $90.24. I think you get in the 80s with an 8 handle. We had Devon. Devon crossed up. It's part of this. It's just, you can see the MACD kind of fluttering around. And since my my algorithm is based on the MACD, it's just another sign that, hey, we might, and I said it before, this candle right now, the high is 47.35. Look how it rejected off that 200-day right there. I wouldn't expect this one. If the afternoon candle seems to hold, again, you're in a confirmed state. The low is 46.58. That 9-day is down at 46.29. So Devon, I think it's a good one. The one that I really like is MRO. If energy is going to continue its strong move upward, MRO here at 24.93. I don't think this is a bad one to get. MRO has a dividend. Let's see what the dividend is. I think it's a good dividend, 1.67. So it's not crazy. Last year, it was down 3.59. That's not a bad place to be for an energy company where energy was down last year. I think you get this one. If you can get it under $24.93, I don't think it's a bad price. The low on this candle is $24.66. So you're trading at $24.73 right now. XLE, like I said, if energy can continue its move upward, we did have a MACD cross up. We're right here at the 200-day. You're rejecting right off that 200-day. Just another one. 84 was the price to get in. You do have gaps down here. So be careful because energy might be coming down. We might, people just don't want to trade in energy right now. Even though we have a Mideast crisis, people are like, yeah, we've had this before. Whatever. XLE. FANG is another cross up. This is Diamondback Energy. It is not Facebook. And by the way, we heard Mark Zuckerberg is done selling. Close to $500 million worth of Facebook he sold in the last 2 months. So, but FANG, another cross up. I mean, it's been a solid move upward. Your RSI is a little bit high at 60. Not crazy about this one. I'd rather probably go into MRO. The other ones that I'll put in a few more, but UVIXI. We talk about the VIX a lot, and the VIX here, if I go to Seeking Alpha and I look at the VIX right now is at 13. And with this sell-off, you haven't seen a pop in the VIX. A lot of people are saying, hey, in order for this sell-off to be justified, we're going to have to see a big pop in the VIX. Well, we haven't seen it. In fact, it's down today by 0.43. UVIXI is down by 0.34. There's a triple levered ETF. You wait for confirmation. 887 is where it got you in. It's at 884 right now. SVIXI has been the play. There's a triple levered ETF short of the VIX. SVIXI has been the play. It's got quite the confirmation. You can see now SVIXI got you in at 102. You're still sitting there at 101, but it's lost its confirmation. So I think this one's more likely to turn down and the VIX is likely to go up. That would mean you'd go to UVIXI. But because they are both decaying assets, UVIXI isn't going to shoot up the way that SVIXI is going to come down. Again, it's a decaying asset. So it's kind of like I told George, hey, TECS might be a good play, but I think your better play is just to wait for the turnaround and then get back into TECL at the time. I think that's a better play rather than trying to time TECS. Try and time TECL because you've already had a little bit of a run in TECS. So I think that's the better play. Okay. Again, if you like anything that I do, it's all here on Linktree. You can get your deal on Trendspider. If you like the algorithm, again, I showed you the algorithm it takes emotion out of your trade. That's the thing. If you're like, oh, I don't know if I want to get out of this because I'm not sure if it's going to be high, use the algorithm. If the algorithm's telling you there's a button hook there and it's about to turn over, and the algorithm suddenly says, hey, get out, that's your indication to get out. You can trade it on a bot if you want. You can create your own strategies. Mine is just a way for you to get started in strategies and trading. Remember, I always say this. You want a strategy. Create a strategy. My strategy used to be, hey, I'll just look at the charts and see where it is. The algorithm changed me, and it was a game changer. It just leveled things up for me. So understanding the MACD leveled things up for me. Understanding RSI leveled things up for me. Trendspider is not plug and play. It takes work. It takes your ability to sit there for a couple of hours a day and understand what these charts say. Even with the algorithm, you could try it on something like Google, where you see the algorithm gets you, the button hook, but it hasn't gotten you out. I think you'll be able to buy this under 130 again, but long term, it should not matter. If you don't have a position in Google, start it. I include all of this, by the way, free on the newsletter. So you can see all these charts. At the very least, you should sign up for the newsletter because it's free. The paid version is the weekend version. And that includes much more education, things of that sort, and specifics. But if you want a subscription to Trendspider, if I'm ever on vacation, you can do all these scans yourself. Because I include the scanners, I include the watch lists, and I include all of the algorithms, the 65-minute and the 4-hour. And I'll include anything else that I have, like the Apple one that Jason created. So if you have any questions, you can hit me up. The process, by the way, signing up for Trendspider is you sign up for Trendspider using this link, and then you email me at dailystockpick3@gmail.com. The email is right here on Linktree. If you want Seeking Alpha, you guys saw, I set an alert, and this was what I wanted to do. I went and looked at NVIDIA. I think I looked at NVIDIA. I think that was the one that I looked at. And I went to the quant because NVIDIA says hold. And I went to the quant and I said, oh, it's a hold. Let me go and look. It's ranked 8 out of 66. What's a top one in this one? And no, it wasn't SN. Anyway, it came up with SMCI. I forget what the stock was, but it came up with SMCI, and it's number 1 out of 26. I was looking at Apple. That's what I was looking at. I said Apple's 3.42 on the quant in Seeking Alpha. What's a good one to get? SMCI came up. And so I clicked here on SMCI in Seeking Alpha, and I said, I want to know when to sell this one. Well, I put in an alert for when the quant goes to hold from strong buy, and it's going to text me. You don't need to watch a chart. You don't need to do anything. You can set up this alert in Seeking Alpha. So if you get Seeking Alpha Premium, I give you $50 off right there on the link. And I said it before, I only have 2 brokerages. I have Fidelity and I have Webull. I love trading in Webull. Webull is the third link here. You get up to 75 free stocks. You can click right there. It is great. I love the app. If you're one of those people who's on your phone most of the time and you want to trade, Fidelity is annoying as F to trade in their app. I love Webull. I love it. Love it. If you are spending anything more than $20 a month for your phone bill, I'm going to give you $20 off on your first month, and check out the plans. It's $20 a month. You're saving 20. It's usually 25. I'm paying 25 right now. You'll save 20. You'll get it for 20 for the next 24 months, for the next 2 years, $20 a month. If you can't work with deprioritized data, which I've never found to be a problem. They say it's less than 1% of the time. I've never had a problem. Never. But you can go up to $35 a month. And you get $20 off your first month. So that's $15 for your first month on the Visible Plus. Plus, they have great deals on phones, upgrade program. You can upgrade to the iPhone 15. I think you get $10 a month off for 24 months and you save $240. I really, really like this company. It is phenomenal. So click on that link, save $20 on your phone bill. If you're thinking about getting a Tesla, remember the $7,500 rebate, tax rebate, now comes off the car. So I was looking at a Model Y this weekend. I trade in what's keeping me in Model 3 is that I have full self-driving, and I bought it for $5,000. AT&T at your house, mobile phone. If you want anything AT&T, I've got it there. Mpower is the app that I'm using now instead of Mint. So sign up there if you want to track your stuff. You want to follow my trades, I'm on Savvy Trader. If I give you any benefit, you can sign up here. I'd rather see you just buy the paid newsletter, to be honest with you. I think you get stuff. I think I sell enough stuff that you don't necessarily have to tip me. I think by supporting me, you either get the tools that I use in order to up your trading, or you get on Webull and start trading with me and provide me screenshots with all your gains. You get visible phone service. I mean, there's tons of stuff to support me. So, okay, I will be back tomorrow. Take care. Say bye. Okay. Yeah. No, Kiyosaki defense. Yeah. I don't think he's wrong. I just think he's a douche. He's not wrong. I just think he's a douche. I mean, he tells people to get out of the market because it's going to crash and that they should read his books. And he says, you've got to understand it's going to crash. If the banks are going to crash and he's taking out $2 million, who's he hurting? Not the banks. He's hurting the people he's talking to. And he's like, hey, don't be one of those suckers that's sitting there, left holding the bag. You want to be one of the people on the right side. Well, the people on the right side have been the people who haven't listened to him. And yeah, the people, the working people, they don't get, I think 10% of the people are in the stock market of the total U.S. population. So that's why my audience doesn't grow. Okay, confirmation, Scott. Let's go over confirmation, and we'll use CrowdStrike as an example. And I am going to put this weekend's newsletter is about, I think, terms that I use constantly. And I'm going to start, the newsletter will include, so here's the plan going forward. And I think you're a paid customer. So this paid portion, it basically, you can see all of the paid newsletters here in the back. And I've got enough of an archive that I think there's beneficial stuff in here for everybody who pays. That's why I raised the price. But included in this paid one, I'm going to start a tag that is education. And it's nothing more than just terms that I use with charts showing examples. It's not a stock analysis. And that's what I'm going to start this weekend. It's going to be just, hey, here's the terms that I use, like button hook, like RSI, like MACD, like algorithm. What's that? So here's what confirmation is. If you take a look, people use it in different senses. The way I use it, and again, Scott, you can check with other stuff, but this is the way I use it. Confirmation, I use a 9-day EMA. And so when you're above that 9-day EMA, that means you're confirmed to buy. When you're below that 9-day EMA, it just means I wouldn't buy because I'm not sure that we're not done going down. And we'll take a look at CrowdStrike, and let's take a look at a long-term. Well, we can do it on the 4-hour. We can take a look at the 4-hour. It's just going to be hard maybe for you to see on the screen. But here, the green portion is the 9-day, and I'm not going to redo my screen just to show this stuff. We'll get rid of this. Remove all annotations. We'll remove the annotations. But that 9-day is the green line. See when we're above that, how we tend to go up? And you're confirmed, and then the second you touch it and break that, you're down below and you're down. It just confirms a downward or an upward trend. That's all confirmation means. Sometimes it doesn't do it completely. Like you'll see this one here, right after earnings. You're seeing it broke down, didn't break it completely, but we did continue down. Then when we broke it, we continued up, but we broke it and we continued down. So it doesn't always provide you. That's why you want to use multiple things on the chart to be able to tell you. Like for instance here, when we saw this, we saw it kind of break down here. Well, look at how high that MACD is over the oscillator. And look, it's crossing down. And look at the RSI. It's super high. You want to be careful in this situation. And this is why I say, always confirm your trades when you're in, so that you know this, so you can watch this. And when you see this, doesn't mean you necessarily get out here at 160, but it does mean, hey, maybe I want to trim because maybe the earnings weren't as good, well received, or maybe we've just been in too much of a run up, because I think this is quite a run up if I remember correctly. Yeah, you went from 122 up here, so you got out with a 22% gain. So yeah, that's all confirmation means, Scott. It's a very simple concept, but that's all that means. And I'll include that in a newsletter with a little bit more explanation. And hopefully I can find some type of official thing. Good morning. Been following for quite a while. Yeah, I know you, Ted. Terminology and charts. Ed, it's probably what I'm going to do on the newsletter. But where would I send you? So terminology and charts, Investopedia. If you go to Investopedia and you look for charts, let's look for technical trading. An introduction to trading types, technical trading. Go over to Investopedia. And you'll see there's probably a good course on here. Let's see. 7 technical indicators to build a trading toolkit. Here you go. you're going to pick it up quicker than you think. You don't have to be perfect. Understand, there is no way I am as good as like Carter Worth, who's on CNBC, or some of these technical analysis on Wall Street. I'm not as good as they are. And what you do over time, and this is what Trendspider is. Over time, this is why I say, my best advice for you, Ed, would be to get a free charting program like Thinkorswim, like Active Trader Pro, like Webull. Webull has desktop software as well. Put some moving averages on there. Put a MACD on there. Put an RSI on there. And then find 5, maybe 3 stocks that you like. And then understand the chart. Find a time frame that you like. My algorithm is in 4 hours because I don't like looking at daily because I don't think it reacts fast enough for my sense. As far as the time frames, you can look at that stuff. But the other thing you can do, actually, the other great thing that you could do is go to YouTube, and I'll include this link too, and go to Trendspider. And it depends on how you like learning. Because learning, I like videos. I don't necessarily like reading articles. I will read articles more in depth, but what gets me interested is videos. So you can go here to Trendspider University, and I think this may give you a great understanding. Understand this is old, so some of the updates on Trendspider, you may be looking at an old screen. But this is it's University 101. So platform introduction, you can see what Trendspider is capable of. That's 2 years old, so it's incredibly robust now. The interface tour, automation, watch list, charting, non-technical tools, multi-time frame analysis, alerts, market scanners, backtesting, indicators. All of that is in Trendspider University, and this will give you a good idea of what Trendspider is capable of. Now, their most recent videos, you can kind of see what it's capable of a little bit more. If you just go to their video list, the latest, Apple's favorite SMA. I've got that from Jason. Market structure basics, Trendspider guided tour for 6 minutes. Jason does a great job. Understand, Jason is a master. And when I release my video with Jason, you'll see I'm just sitting there as a dummy. So I would tell you, Ed, it took me a while. It took COVID and a 40% downturn to get me pushed to technical trading. I was just a chart guy who would look at the charts every now and then. I did fundamental mainly. And I was like, yeah, Apple seems a little bit extended. I'll sell it now. I'll trim. I didn't look at the charts too aggressively. Now that I've gotten hooked on Trendspider, it's a tool I just can't live without. And it's the best charting tool in my opinion. If you get used to the free stuff, meaning like a Webull, a Thinkorswim, a Active Trader Pro, if you get used to the free stuff, Trendspider is just taking your training wheels off. And it's, you're going from like a casual BMX rider to like a guy who's doing backflips on a trail. That's all it is. So, yeah, I just don't. Christian, the guy's been more wrong than right. I mean, he's 100% been wrong. And how did he build his fortune? It wasn't necessarily on real. He'll tell you it's on real estate. It's on books. His income's all on books and teaching people. So I just don't. I think he tells people. I think his fundamentals are sound, but I think he's just one of those charlatans that, scares people. Yeah, and Mike, who owned gold, silver, land, or cattle. Yeah. Yeah, it's Christian, it's just a difference in philosophy. I think that guy in particular, I think he scares people out of the paper assets and it wants people to buy the hard assets. But over the past 20 years, 30 years, my trading lifetime, paper assets have been far superior. So he scared people out of the greatest wealth opportunities around. So you can't always be right, but I think this guy I think he wants to sell his own thing. And I think, for some people it works, for other people it doesn't. And to say, people should get out of banks completely and to be that aggressive, I just think he's a douche. He's one of the douches. It's like Jamie Dimon. I mean, you can't tell me that he's not manipulating the markets to a certain extent. He wants to manipulate things. That's what he wants to do to build his wealth. He's Jamie Dimon. Bitcoin is the enemy of the people. Bitcoin is trash. And what do you find out that weekend? His traders trading Bitcoin in large things. Robinhood, I didn't trust. So I had some friends who traded with Robinhood during the GME, the GameStop stuff. And I know when they started to pull their money out, they were charged $70 to close their accounts. Now that may have changed. It also took them 3 to 4 weeks to get their money out. That was the problem I had with Robinhood. That may have changed. But for a company that's new as Robinhood, that is as shady as Robinhood, I mean, make no mistake, they corroborated with Citadel during that GameStop short. And I think they saved the stock market, to be perfectly honest with you. I think there were a lot of people, a lot of hedge funds that would have gone to zero, that would have crashed the market and completely, caused a lot of havoc. So I think they might have done the right thing. But at the end of the day, it was, the small guys were getting rich. And I think Robinhood, I just don't trust them. So Webull, different story. I like Webull. I've had some discussions with them, not about this program or anything like that. I've chatted with their support. I like their support. I did test it out before I recommended them. And I like their desktop software. I told you guys, I haven't opened up Active Trader Pro since I really got Webull. I like it. I like it a lot. Look at Bank of America. Oof. Continuing that road up. Look at BA. I sold out of Bank of America. I shouldn't have sold out, but I did. Look at Boeing. Boeing's up 1.61%. Got you out with a 36% gain here. That MACD has fallen fast while the stock price has not. I think you're going to see a rebound in this one. We just passed the 200-day, the golden cross there. That was going to be a significant resistance. We may get pulled back to 230. So I like it though. Yeah, and Christian, I'm not saying Rich Dad Poor Dad is a complete fraud. I just think he talks his book too much. Oh boy. How's SQQQ doing? $14.60. We're coming back. Market's coming back. So, okay, I'm going to go screw these things together. I